Extreme fear is taking over the market, and the written press is making it worse with irrelevant data. Even analysts are predicting a massive crash in traditional markets. So why do we think differently? Let me explain why you shouldn't follow the herd. Right now, we're facing a reality that's becoming increasingly obvious. Extreme fear has taken over the crypto market. We're at a fear index level of 17, which is the lowest we've seen in the past 2 years. And before we dive deeper, I want us to do a little exercise. Take a look at Bitcoin's price history over the past 2 years. And I'd even say throughout the entire life of this asset, and practically any other asset in the world. What happens when the masses panic and the fear and greed index plummets? Notice how, in these moments, Bitcoin's price tends to find a comfortable zone from which it can take off. And we've seen this pattern time and time again. Here, we can see how fear grips the market once again. And coincidentally, we're at a very interesting point where Bitcoin suddenly skyrockets. What's happening here? The big institutions, hedge funds, and whales, those with massive liquidity to inject into the market, are taking advantage of retail investors' fear. Investors who check the news daily and fall into the same trap. And don't get me wrong, we all do it. But they exploit that overly simplistic mindset. If I see a negative headline, the market must be bearish. That kind of basic thinking often leads the average retail investor to make emotional decisions. They turn on the TV and hear how the macroeconomy is in shambles while watching the S&P 500 and NASDAQ plummet. Or in crypto, they see the written press and YouTube channels spreading fear with news that, when you really analyze it, tells us absolutely nothing. Take this headline, for example. It simply states that Bitcoin has recorded its largest red weekly candle in history. And yet, there will be investors who read this and panic, thinking that markets must inevitably crash just because of it. And of course, when negative crypto news is accompanied by equally negative headlines from traditional markets, big companies dropping significant percentages, the S&P 500 and NASDAQ declining, it only fuels the fear. Then you get analysts making bold predictions that, if they happen to be right, I guarantee it'll be pure luck because there's little logic behind them. Like this one claiming that the NASDAQ should now drop significantly, similar to what we saw in 2022. But this is just an extremely hypothetical scenario. Take a look at this chart from 2009. This kind of drop has only happened once. And that was because in 2020, an absurd amount of money was injected into the markets to prevent a global crisis. The US government was even handing out stimulus checks, and many people invested them in stocks. That created a completely abnormal V-shaped recovery, which at some point obviously had to correct. But what seems weak to me is taking a moving average, this blue line here, and saying that because the price tends to revert to it, the market must continuously move toward it. We don't even have a full historical view of this blue line. I'd like to see how it behaved before 2009, before using a single technical indicator to claim that traditional markets have to drop further, even after everything they've already lost. So, in short, what we're seeing right now is extreme fear, not just in crypto, but across traditional markets as well. And let's go back to our earlier exercise. When extreme fear reaches its lowest points, what does Bitcoin usually do? It tends to rise for the reasons we just explained. Big institutions take advantage of this fear and liquidity, absorbing retail selling pressure and then making the opposite move. This has always been the case for decades and decades in every market around the world. This isn't new. Fear takes over, and look at what Bitcoin does next. Again, fear dominates the market, and Bitcoin starts an upward movement. Even in this corrective phase we're seeing here, which is a typical corrective pattern, look at the fear index. Whenever it drops below 40 in a sharp spike, it aligns with micro-reversal zones in the price. Not just once, not twice, not 3 times, but 4 times. And right now, the fear index is sitting at 17, extreme fear. And this is where we need to ask ourselves, looking at the chart, if there's an obvious fear-driven scenario in the market based on everything we've been discussing. Negative news, one thing after another, and we see that Bitcoin has already dropped 28%. Now, let me ask you a simple question while we look at this daily Bitcoin chart. Do you think it's smart, in a moment of extreme fear, after Bitcoin has already fallen 28%, not to mention how much coins have dropped, do you think it's a good idea to enter a sell position now? With a 28% bearish extension already in place, and in a state of extreme fear, this isn't about predicting the future. No one can do that. What we need to focus on is risk management. Now, let's talk about other metrics. As you probably know, the traditional market has a correlation with crypto. And if we look at the S&P 500, it's also been dropping about 8%, which for traditional markets is a huge deal. And here's something else. Extreme fear is present in the S&P 500 as well. Since crypto has a strong correlation with traditional markets, let's take a look at the seasonality of the S&P 500. We're going to observe how its price has behaved over the past 25 years when we visualize it on a month-to-month basis. And now, I want you to notice something. February tends to be a high point for the S&P 500, often leading to a significant drop into March. And March, historically, has been where the market finds a technical bottom before starting a recovery. Now, of course, this isn't a holy grail. Past events don't guarantee future results. But analyzing 25 years of data gives us a solid enough sample to at least acknowledge this seasonality in the S&P S&P 500. Obviously, you can't build a strategy on this alone. There's much more to consider. But now, let me also show you Bitcoin's seasonality. Since Bitcoin is a much younger asset, we'll analyze the last 10 years. And in a somewhat similar way, we see that February tends to be a high point for Bitcoin, leading into a bearish move that typically finds a technical bottom in March, before continuing its upward trend. As I mentioned earlier, Bitcoin has a correlation not extreme but relatively significant with traditional markets. And if we look at this seasonal pattern, we can see that both the S&P 500 and Bitcoin are practically speaking the same language. But as I was saying, this alone shouldn't be the sole basis for building a trading strategy. Everything needs to be approached from multiple angles. Right now, on March 10th, if we analyze the last 10 years of Bitcoin seasonality, we'd be around this point in the cycle. And for the S&P 500, we'd be here. At the same time, there is extreme fear in the market right now. And as I showed you earlier, we know what tends to happen when extreme fear takes over. If we combine all of this with advanced technical analysis, not just understanding what smart money is doing at the moment, but specializing in identifying market extremes, we can see how institutions operate in these conditions. Now, look at the S&P 500. It has been dropping significantly, almost 8%. And if we take a look at the individual stocks within the index, the picture gets even scarier. That's exactly where I want to focus, the fear factor. Right now, the S&P 500 is testing a key defense zone, and we could be witnessing the setup of a potential trap. How can we identify this? Because we use cross-analysis, and we're seeing that the Nasdaq, the tech index, is currently hitting its equivalent defense zone. If you ask me, they could even trigger another bearish scare, but that wouldn't necessarily mean the end of the world. The real question is what happens afterward. If we see a recovery, that would be another story. But right now, the goal is to cross-check all this information. From a seasonal standpoint, we could be at an interesting level, possibly ahead of a price reversal and continuation for the traditional market. And this is happening in an environment filled with fear. But let's say none of this seasonal data existed. Would my analysis change? No. I would still tell you the same thing from a technical perspective. I'd still say, hey, we're in a key defense zone, which could be interpreted as a market extreme. So what does all of this mean? Am I saying without a doubt that the market has to go up no matter what? No, I'm not saying that. The truth is, no one knows what's going to happen in the financial markets tomorrow, next week, or next month. But what we can do is study a long-term investment hypothesis, carefully analyzing risk. And if we're talking about risk management, the traditional market is now in zones of great opportunity. Like I said, if they want to push prices lower and create more fear, we allow it. It would still be within the expected framework. But right now, we are in a very interesting spot where a long-term investment strategy in equities within the traditional market allows you to manage risk effectively. You can set a very tight stop loss while aiming for a significantly larger long-term profit target. You risk losing one, but your take-profit target is at least 10. This is where opportunity windows open in these types of market imbalances. If our investment hypothesis plays out well, we gain 10. If it doesn't, we'll know quickly and protect ourselves immediately. So if we're wrong, we lose one. If we're right, we make 10. That's why we're not trying to predict the next move. We don't need to. We're just managing risk. And now I'll explain exactly what we think about Bitcoin and altcoins. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Bitcoin and the S&P 500. As I was explaining earlier, Bitcoin and the S&P 500 have a correlation. Looking at Bitcoin's seasonality over the last 10 years, we see that February tends to mark a local high before a decline, reaching a low point around mid-March, followed by an upward trend. Now, if we apply this to Bitcoin's current chart, we can see that this year, the peak was actually found at the beginning of February, possibly even at the end of January. But remember, seasonality is based on averages and algorithmic measure. The key takeaway is that we have been coming down from February, just as Bitcoin seasonality suggests. Historically, Bitcoin tends to decline until mid-March, right around where we are now, before resuming its upward path. According to seasonal analysis, the bullish trend should eventually continue, especially when we factor in the extreme fear present in the market. And here's something else to consider. We've witnessed a clear distribution phase in the market. Institutions have used a black swan event to push Bitcoin down to a precise institutional target. This is something we frequently see in financial markets. After a period of distribution or accumulation, especially following strong momentum, institutions often drive the price to a key one-to-one target. Once that target is reached, they reverse course and continue in the opposite direction. We don't know if this is going to happen, but as you can see, we're right here trying to identify the key market extreme that could give us reasons to think positively. Although, if you've been following Crypto Insight, you've already seen in several past videos that we've been sharing our bullish outlook on the market. So, now I'm going to tell you what Bitcoin's next moves could be, why we think so, and how you could position yourself for a potential upward move. But before that, I want to introduce you to our private private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. And what better time to do it than now? Our friends at BitUnix have set up an exclusive promo for new users where they'll cover up to $100 in losses. So if this is your first time trading and you're looking to join the Crypto Insight Premium Telegram channel, you might want to take advantage of this safety net in case of potential losses. Remember, BitUnix is an exchange that doesn't require kite and doesn't need a VPN to be accessed from anywhere in the world. To make things easier, I'm leaving you the BitUnix promo details in the Crypto Insight Premium Access form in the description and pinned comment of this video. So what do we think Bitcoin and the crypto ecosystem might do? When it comes to Bitcoin, we may have already seen that key market trap, setting the stage for an upward move sooner rather than later. However, as you'll see in a moment, we also acknowledge the possibility of one last shakeout, one final liquidity grab before the real move begins. Of course, we don't know for certain whether this final drop will happen or if the market is already ready to take off. But in the context of long-term investing, perfect timing isn't a priority, since these trades can remain open for weeks or even months. That being said, we are in an interesting zone for long positions. If you look at Ethereum's chart, it's testing its key support area. It may have even completed its trap move. But if you ask me, a final structural trap, the trap within the trap, would be ideal. That would be the ultimate confirmation for Ethereum and the broader crypto market to start trending higher. But again, if the market decides not to give us that last shakeout, so be it. We don't know for sure. As you can see, XRP is also at a critical support zone. And yes, if the market wants to move up now, it won't wait for anyone. But as I mentioned earlier, why not one final scare before the uptrend truly begins? That's where strategies like position scaling come into play. Scaling into positions can be a very effective approach. Not always, but in these kinds of market conditions, why not? In upcoming videos, I'll show you what we're observing in charts like Solana, for example. We'll also talk about BNB and the key levels it's currently testing, another market extreme. Then there's Link, another strong asset, along with several other cryptos. Now, tell me, are you feeling fear in the crypto market or are you staying strong? Drop your thoughts in the comments. And if you enjoyed this advanced technical analysis, something you won't find on any other YouTube channel, not even close, make sure to like this video, subscribe to the channel, and hit the notification bell so YouTube alerts you whenever we post new content. Good luck with your trades and see you next time.